Kind of curious. Let's do a little bit of a roll call. Where all is everyone from? I know we got some international people. I know we got some cross America people. Who? How many? Where's everyone from? Just kind of curious. Canada, San Jose, Michigan. Oh, Portugal, Peru, Singapore. Wow, Argentina. Nice. All right, so we got a lot of people. So one thing I want you to keep in mind is, yes, we have a lot of people, and that also means we have a lot of different opinions and views on things. Now, in the market, our job is to dictate based on the information that we are seeing and the way we have chosen to analyze that information to then make a conscientious decision, place a trade, and then exit at a predetermined level based on your own upbringing, your natural environment, and all of those other things together. You are going to see the market different than somebody else. That is why certain patterns work for some people. That is why certain indicators work for some people, and why both of those do not work for other people. There is one inherent thing that every indicator, every pattern, every volume, everything throughout the market has in common. They are all dictated off of price. And you go, oh, no, it couldn't be dictated off of price. Think of it this way: more people can participate in a market that is $50. Less people can participate in a market that is $300. Now, why is that important? You go, oh, well, this is the price. I know that there's going to be volume. Yes, that volume will come in at a specified price. Once again, the half and the whole dollar areas that we show in all of the courses through there. Those whole and half dollar areas are crucial to profit taking zones and entry zones based on the prior opinions of an individual. An example being, if and only if I see price above $286.50, then I will look to enter my trade. You have just dictated a price at which you will enter. The rest of the market does the same thing. Now, the thing about whole and half dollar areas is psychologically, those are safe zones. Most people are going to look at, oh, okay, if I make this next dollar, then I'm going to look to exit, or if price is above this next dollar, then I'll look to enter. And the exact adverse for the for shorts: if price is below this dollar, then I will look to short. If price is below this 50-cent level, then I'll look to short. That is where volume comes into play. We have enough people participating at that exact price to then get our next move up. So if we know that everything else is dictated off of price, why do most candles also utilize time? Shouldn't time be an irrelevant factor? Yes and no at the same time. So time is a very relevant factor because a majority of institutions, funds, and traders want to be in and out of a trade within a certain allotted time. Also, within an allotted time measurement, you can see the nitty gritty of a stock. So over the course of 30 minutes with a 5-minute candle, we can see that price has made all kinds of movement right through here. We can see wicks, we can see full bodies, and this is regular candles. For those that are accustomed to me using Heikinashis, this is regular candle. So we can see right through here. Okay, we wicked up, we wicked down, we wicked up, we wicked down, price stayed through here. How does this candle look? How does that candle look? If you're a patterns person and you're a candle and you're doing candle analytics, then this candle may mean something different than this candle or any of these candles. Now, the Renko bricks, as they're defined, take out time. They are direct price. Another brick will not print until your designated price has been met, regardless of time. We can see between our grid section here, we have 1 o'clock and 2 o'clock. But our grid section through here, we can see is 1048 all the way to 156. That's when we got a decent amount of movement. We can see that this is full price action. This is clean price action. Does not matter the amount of time that it took. It was just the price. Whereas in here, if you were doing strictly candle analytics, you may have actually went long at this position right in here because you started to see candles basin. So again, back to our backgrounds on things, given how you grew up, given your life experiences, you are going to analyze these candles in a different way. Renko bricks, they are like a light switch. They're either off or they're on. Now, you do miss a little bit of information with Renko bricks as far as how long something has been consolidating in a range. If you've been through any of the courses or the things that I teach you there, you'll know that, okay, typically most stocks at a specific time do tend to show a reversal. That is a time condition. Also, the time condition with a 5-minute trend. The thesis, if and only if I see a 5-minute trend above XYZ level, I will look to enter on the last 30 seconds of the 5-minute candle. That time condition that you're setting there would be irrelevant if utilizing Renko bricks. Renko bricks, you could get your move in 10 minutes or 10 hours. So how do we use them together? How do we use both of these together to profit? Well, the way that you would use them together is that you have your initial time condition, your time-based indicators. Let's, for example, use the TTM squeeze since everyone is familiar with me utilizing that. If I saw that there was a squeeze forming on the 5-minute chart and I believed price was going to squeeze to the upside, I could then use the direct price action here and see that it is breaking that level to confirm continued upward movement. Now, yes, you can do the same thing by reading level 2 information such as time and sales and L2 book in Thinkorswim and many other platforms. I don't necessarily like that idea because you can read the time and sales data, but one, it is extremely delayed and you may miss a couple prints or you may see some wacky prints that are going to throw your thesis off. So combining both of these can be a very, very strong strategy, whether or not you use regular candle or Heikin-Ashi candle. So how do we get Renko bricks brought up? Let's go ahead and get into that. But before I go into the process of bringing the bricks and everything up, are there any questions as far as the initial portion here? All righty, not seeing any. I just want to make sure. All righty. So let's say you're utilizing Thinkorswim. Oh, yep, I'm about to go on to that, Sonny. All right, so let's say that you're using Thinkorswim. If you're using Thinkorswim, it's very quick to just go to the settings and the time axis and put that up. If you're utilizing such as NinjaTrader, AT charts, Sierra charts, typically most of this will either be in the candle settings or the price action settings. You will see an option for Renko. Sometimes they will put range bars with Renko. They are two separate things. Do keep that in mind. Renko is direct price action as far as the ticks that you have defined or ATR. The range bars are your designated range of price. There's a lot of little nuances with range bar, much more so than Renko. And one day I will do a webinar on true range bars, and we'll get into the nitty gritty of those. One thing to keep in mind with Renko is some platforms will allow you to put wicks on your Renko bars. They are, well, they're exactly that. They're wicks. And they will tell you the high price and the low price through there. Regular Renko is just going to have the printed price. So let's go ahead and see what that looks like. On Thinkorswim, go to the gear icon. Click on the gear icon and go over to time axis. You can see aggregation by time. Click on that. Click range. By default, Thinkorswim has range bars. Click on that. Click Renko. You will now have the option to put your desired tick size. What the heck is a tick size? This is going to dictate when your bars are printed. Me personally, when I am working with the futures contracts, such as the ES, I use a 2-point bar or 8 ticks. You can simply double click, put in the number 8, and you now have an 8-tick Renko bar. Let's say you don't trade futures. Let's say you don't trade futures at all. You could care absolutely less about futures on that aspect of things. Let's go over to AMD. Now, that 8-tick that we see in there is now going to be the value of 8 cents. 1 tick on a stock is 1 penny. Another way you can see the tick value of something is on your Thinkorswim, go over to the DB, the dashboard. You're going to see what the tick value is. All stocks are 1 tick. Oops. Let me get that off of there. Come on, don't be difficult. There we go. Alrighty, so what setting should I have it on? Well, you'll also notice that you have the option to set this on what is known as the ATR, or the average trading range. Now, ATR is the most direct brick that you can get. The only issue with this is that an average true range changes. The issue with Thinkorswim is as that true range changes, it continues to redraw your chart. So right now, it'll stay a little bit stable. But as soon as we get some volatility coming in, that is where we run into the issue. If you gap up by 10 or 15 cents, then that true range has changed. So it has to go back and repaint everything through here. Yes, this is being recorded. You have to, it itself will repaint everything. I find that to be a hassle and to be a bother with everything. So let's say on AMD, we know AMD's ATR is about $2, $2.25. That means realistically, when we're looking between price action, we can see anything from a 10 to 20 cent move. If I was 10 cent above a resistance level in here, I would consider that a good move. If I was using a reversion style or a 2 to 3 bar confirmation, that means I would be waiting for 20 cent above that resistance for me to get into the position. So if I take this and go back to a 10 tick, oops, we can see that we have half of a Renko bar printing because we're at 53.15. If I have designated that 53 is my resistance and my trade plan and my thesis is once we have printed 2 bricks above the resistance, I will look to enter. That is the equivalent of 20 cent above that 53 level. Now on the Renko, no matter how much time passes, I will not get another bar printed until we are either above this level or we have regressed and we are now below that ticked value. Now a commentary on the regression here. How do we know when something's reversing? The cool thing about Renkos is that to get this red bar, the price action has to subside the full tick value and then print one more tick value. So if you were doing a 3-brick reversion, there are 2 ways that that could be articulated. If you counted this brick as 1 brick, then that would be 1, the second brick prints, and then the third brick. So your second red brick would be the third brick. Some people wait for this third brick to be printed. That is entirely up to the individual and how much confirmation you are wanting. Given what your tick value is, that can be different for each stock. I have a notional value on things. If it is $100 and under, I tend to use a 10 tick value. Some use a 5, some use a 25. I do not go to a 25 tick value until I am at a price action of $100 or higher. Why? Well, if we have something like Apple, for instance, and we have an 8 tick or even a 10 tick ATR, I'm sorry, a 10 tick brick, you can see that there's a lot of choppiness in between here. That defeats the purpose of a Renko. The Renko is meant to get rid of that choppiness in there. So we see our choppiness here. We see our choppiness in here. Let's open this up to a 25 tick. Now, that's a lot cleaner, isn't it? A lot less choppiness. If you were to have a moving average on this, I'm sure this would be a pullback to the moving average. So you can see how clean that price action is right through there. Now, let's look at the same area through here on a regular candlestick. So keep in mind from roughly 930 to 932 right in here. 5-minute chart, regular candlestick. That's how a 5-minute chart looked, just in that price action right there. Let's bring it on a 2-minute. I don't know about you, but that looks pretty dirty. I never would have touched that whatsoever. I never would have thought to touch any of that position in through there just due to how bad that chart looks. But then again, we bring it over to the Renko. Even on a 10 tick value, it cleans it up a lot right through there. So that would have been an easily grabbable position. And once again, on a 25 tick, we see that the trend is even cleaner. So yes, you can use Renko on stock. Yes, it can be a great tool, but it should not be your only tool. So let's take that Renko and let's add a simple 9 EMA. Most new traders are familiar with the concept of a 9 moving average. So a 9 EMA, add selected, and let's make this color purple. Nice dark purple. Now, Check that out. We get our move up. We have a pullback. If your trade thesis and plans dictated that you would get out of the trade once there is a full brick below, a full printed brick below that moving average, you would not have exited the trade until this brick. Maybe this brick, depending on how well you stick with your plan. So, but it seems we could dictate that this would be the area. So if you got in on the second brick confirmation and you got out on this brick, let's say worst case scenario, you got in at 295.25. You would have exited the trade at a worst case of 297. That's approximately two deltas, $2, so on and so forth. So however you want to look at it, it would have allowed you to stay into the trade. But let's again bring it on a 5-minute chart or a 2-minute chart with the same indicator. Okay. Price wicked and got above it. We had this little hammer. Price wicked, but it didn't print. And then we got this big gargantuan candle here. And then if you were waiting for a candle to print below, it would have been on this candle that you would have exited. So let's say best case scenario is you probably got in on this candle at 296.50. Let's give it the benefit of the doubt, 296.50. And let's say you saw the move a little bit before. You would have got out at 297 right through there. You only made 50 cents versus making $2. And that's the difference between a regular candle and a Renko style brick. The time candles are very beneficial when you are using them for reports, when you're using them for long-term thesis. But if you're using it for direct price action, I do not recommend short-term candles like this that are on a regular time basis. That is why you always see me utilize Heikinashis, because it's an average of price. Now, even with a Heikinashi, it still would have read this candle for us to get out. But we may have seen this move much sooner, this whole downtrend, much sooner with the Renko. So let me hop back over to the Renko on a 10 tick. So yeah, this is that same move right here, the 10 o'clock time frame, 10 to 10:15. Look how many times it was below that moving average on a 10 tick. You would have been out of this trade a long time before and been able to scalp in between there versus staying into that trade and then grenading the position. Let's go to the, like I was mentioning, a 25 tick, since that's what I typically use on anything price actioned above. And again, we're looking at the 10, 10, 15 time frame. All right, 10, 10, 15 time frame right through here. Look at that. So candle print below would have gotten you out a full brick before. Right here, we have that brick. You actually would have been out here, and then, yeah, it did go up, and then it just puked out, so it had all this chop. So the Renko would have saved you that headache. If you had both charts pulled up, you would have been able to utilize the standard candlestick, i.e. the price candlestick, and then noticed that price was significantly dwindling through here, and you would have been able to cover your position. You go, oh, but the rest of the day it went up. We had no idea any of this was going to happen at that point in time. It did not show on the regular chart, and it did not show on the Renko. We did not see true price reversion until really in here. All of this was a lot of chop right through here. Could you have made this play back? Yes, you probably would have entered realistically on this candle and exited on maybe this candle, depending on what you're working with. So 297.50 and $297.50. More than likely, you would have scratched even plus or minus a couple pennies through there. So things like this are a lot of chop. Now, I know that's a lot of information to absorb. Are there any questions as far as the settings of the Renko and how to look at it before I get into the moving averages that I utilize with this strategy? All right. Let's see. Just give people a minute. All righty. Seeing no questions. So the moving average portion of this. Oh, yes, I use 8 tick on futures, and I use 25 tick when the price of the stock is $100 or greater. I use 5 or 8 or 10 when the stock is below $100. So if you're just getting into it, I would recommend using a 5 or a 10 tick when doing stocks under 100, just because of the way that they move through there. And don't use an 8 because you'll get a little confused on the calculation. Happens to everyone. Trust me, it happened to me the first time I used them. If you're already on a trend move, looking at a Renko chart, is it late getting into a trade? So that comes down to your trade plan, and that actually kind of goes into this. So the 2 moving averages that I use when I'm working with Renko, because one, just about every other indicator that's out there is based off of a time chart. It's not just direct price action. So they can be a little faulty. And there are some people that do offer Renko based indicators, but they're either really, really, really screwy, or they'll actually charge you per time frame, which I really do not believe in by any means. And you can look it up. There are plenty of them for TradeStation and the like all through there that they'll charge you, okay, $80. Here's a Renko strategy for the 5-minute time frame, or not even a strategy, just Renko in general. And then they may tell you a couple little strategies with it. I don't believe in that. What I utilize is go to studies. I use a 9 exponential moving average, and I use a 50 exponential moving average. Now, I was working with a student the last couple days, and he mentioned a little thing that I want to pass on to you guys. So the 50, the long term, change that color to brown. The 9 EMA, change that color to yellow or orange. You go, why would you do that? Well, if you're looking for a bullish trade, the sun is orange. So when the sun is above the ground, when the 9 is above the 50, we're bullish. When the sun is below the ground, we're bearish. So, things are not looking good. It's dark out. Things are not looking good. But when the sun is above ground, things are looking hunky-dory. We're looking bullish through things. It's a little cheesy. It's a little tchotchke, but when you think about it in that idea, it kind of sticks with you. And all you have to simply go is, all right, is the sun above ground? Yes, 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 yes. Oh, look for a bearish trade. Boom, sun below ground, and we play it. Bullish trade, look, 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 sun rising up. All right, price came up, tested the 9, and then made its way up. Can you share this Renko setup? Yeah, so actually everything you've seen right through here, this is all I use. I only use, and then I use a supply and demand zone, but that's something anyone can grab. This is all I use, is a 9 exponential and a 50 exponential. And I just go off of direct price. If this move has already made its move, then I miss the move. Big deal. If I'm looking at it with another stock, then I look to make sure that the average of price is holding on here. If I am just using the Renko chart, then I can only take a trade once this has occurred. Now, if I'm using this in duration with another chart, so let's say I wanted to do something off of the TTM base. There we go. So we have our squeeze on the 5-minute. All right, awesome. When do I want to get into my squeeze? Traditionally, it is once the squeeze has fired at 150. Right in here, we would have looked to gotten in actually right at the break of the top. So breaking that top, price still holding the moving average, I can see that that is a relevant area to get into. I have my squeeze firing, and I see that price is maintaining above its short-term average. So that gives me more confirmation to work with. If I see that price is consolidating time-wise, and I see that true price action is also staying very sideways, I know that, okay, the smart thing for me to do is liquidate a portion of this position, because where on the regular candlestick, the candle may get longer as we go through, but this price, as soon as this price starts to regress, that color's changing. That color's changed and that brick is printed. You're seeing it exactly as it occurs. Same way you're seeing it right in here. Here, you're just seeing a candle elongate or shorten. So you can see how that would protect you as far as something truly failing. Now, let's say you don't use TTM. Let's say you use Ichimoku. Let's see, that's the PB. Here's Ichimoku. All right. We got our averages through here. We can see we're above the cloud. Like, oh, I see price consolidating. Maybe we're going to dip down to the cloud. Oh no, we've broken above and we pulled back to an average. Do I have certainty that this price will continue? Well, we actually see, a little bit of uncertainty right here based on the price, or based on the time candle, and that's at 2 o'clock. But going right over here, we can see price breaking above, and there was no question whether or not it was bullish. We still had direct price making its way up. So while this may have made us hesitate, if you did not see it as a pullback, if you're like, oh man, this is going to break, we never got the printed brick to say that, hey, this is breaking. So this would have either given you the confidence to get into that trade or to continue that trade. So that's why I like those Renkos. They just kind of help you stay into a good trade. So if you have an issue with taking profits early, maybe, and I'm just saying maybe, putting together a strategy that dictates, if and only if I see a 2 brick risk, then I will get out of that trade. And that would be on this 50 cent of risk. And you go, oh man, 50 cents sounds a lot like a lot. Not when you're going for $3. That would be a, what, 1 to 6? 1 to 6 ratio, give or take. So it's a realistic idea to work with. So now we got our pullback. If this bar was to print, we would be at 300. That is a key support area. If price is pulling back to that area, and we see that it has printed and continuing down pressure, then yeah, we should probably look at exiting the trade with our nice amount of profit that we already have. So if you've got a 2 brick risk, what should your profit be? I personally like to see a 2 brick for a 3 to 6 brick move. Now, depending on your brick size, that will kind of dictate what brick profit and risk you're going to use, because a 3 brick profit is 75 cents for a 2 brick risk, and that's a little tight. That's a little tight for people. Maybe with a 25 cent, you want to go for a 2 brick risk for a 6 brick profit on a 25 cent. If you're on a 10 cent, a 2 brick risk for a 4 brick profit. It's entirely up to you, and there is no right or wrong answer. One thing to keep in mind, though, is you will always have to watch out for realistic price action levels, Fibonacci's, whole dollar areas, so on and so forth. Now, right through here, this is a 5-minute chart. We have a lot of wicks, even with the Heikinashi, and we can just barely see that there is a top right in here. Price action was kind of topping out with all of these wicks, but it'd be a little hard for some people to see. Now, look at it here. Same movement of this expressed right in here. I don't know about you, but what I'm seeing is a very clean double bottom setup, and I would dictate, if and only if I had price above, that neckline, I would look to enter the trade. That would be bullish. That would be a classic W or double bottom pattern, however you choose to phrase it. You can see how price is reacting at specified levels much easier. So, the ATR. So, the ATR itself is just the average true range. I talked a little bit about it earlier. If you were to take this, oops, my bad, and put it on an ATR based time frame, you're going to see how many times it tries to redraw the chart. That's a hassle, because also, if you do not know what the ATR is, how can you designate specific areas? So right now we're a little bit in tight range. The ATR changed up. We got a little bit of choppiness through here. This is a little bit of a wackier pattern, but it's still working. They use a 14 period for the ATRs on this one. So that brick size is 303 to 339. So about a 40-cent brick, it looks like they're using. Yeah, about a 40-cent brick. That brick could change in the next 10 minutes, the next 20 minutes. So, and it could also cause a lot of issues. If you do not have a standardized brick size, then it is very difficult for you to predetermine your risk and reward. That's why I recommend a standardized brick size based on price. You may find that as a swing trader, you prefer 50-cent bricks or even dollar bricks. You may find as a penny stock scalper that you actually prefer. So let's use MVIS, I believe, was the one that was going all wacky today. Let's show what that would look like for our low cap people. So open this back up, time axis, range, Let's do five ticks. That'll make life easier. And Renko bars. Cool. All right, apply. MVIS. There we go. And here it is on everybody's favorite TTM. Here's the TTM on a 5-minute chart. Let me remove all the stats tools, kind of clean it up a little bit for us. So on our 5-minute chart, even with the TTM, we stayed in consolidation. And let's say you wanted to get in on this candle, 1010. Well, if you had a if and only if I see a two bricks above price action, then I will look to get into that trade. We only had 1.5 bricks above here. The second brick would have been above 180. Price only made it to the 182 area as far as one or two prints, but as far as the calculations on the Renko, we didn't even make it up there. We didn't make it up high enough for it to validate a new printing of the bar. We see we had a lot of chop, and then a confirmation of a short. Let's say, again, you were looking for the 2 brick confirmation. Okay. Half a brick, 1 brick, second brick. So either getting in on that brick or that brick, and then going to the next support area, i.e. 110, 11, whatever the support area is that you designated, actually right there. So the top of those other bricks. So we see price actually went 1 brick below it, but this, it seems we could all agree, was the reversion point currently. So it takes out a lot of all of the, you see all the noise that you've got through here. And then to go back to our cheesy sun below the ground shorting versus even with my Keltners and my TTM on a 5-minute, you see there's still a lot of noise in between here. I would have already been frustrated with all of this and never would have looked to actually even continue. I would have set an alert on that. Here, it's clean cut. It's either here or it's here. There's no long term. There's no BS. It's just this is price. So, Creed, at that W pattern, would you have entered in the first leg after the second or third red bar? Let me go back to that. So on Apple. So on our Renko 25 tick. Doop, doop. My entry on this would have been this bar. Realistically thinking, I see that our top right in here of price. So we had 1 bar up, 1 bar down, 1 bar up, second bar. And I would have used 2 bars worth of 2 printed bars worth of risk. So entry here, play. We made it up to the next resistance point. So let's say I got in late, 303. Let's say I got in at 325, just to keep the numbers easy. I would have been in at 325, which is actually like way the heck up here. So let's say I got in late for some reason, got in at 325. Up here, I've already made 25 cents. I'm at a resistance point, maybe get out. But like I said, I look for 3 to 6 bricks worth of that. So I would be looking to exit up here in the 350, 307.5 area. I would not be out of this trade because I did not have 2 printed bricks and I do not have price below the moving average. A simple moving average crossover with this as either a guide or a full-blown strategy will make things easier. Do not make it any more complicated than it needs to be. A lot of people, they'll see something like this, they'll go, oh, that's too darn simple. Look, for once in your life of trading and in life, this is that simple. If you don't believe me, back test it. Back test it all the way. Back test it 1,000 times until you see, man, he's not lying. Can you add some other stuff to it? Yes. Can you do some other things to make it more proficient? Yes. When I add the supply and demand zones, that makes it easier for me when I'm doing futures, when I'm doing stock. Not everyone wants to have that indicator. So that's perfectly fine. Not everyone can get that indicator, but you can still clearly define supply and demand zones with Renko. So looking through here, where is our range of things? Well, if I take this apart, we can clearly see that right in here, we had a lot of trapped range in this $1. Finally, we started to get up, and this trade I would have stopped out on. And then we finally broke it again right through here, and we rode that moving average up, 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 up. Here, would have gotten out of the trade, up, 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 up. So you can see you need to practice with it and figure out what settings are best for you. Yep, so the supply and demand zones, this is an indicator that was passed around the interwebs. I've shared it. It's up in the room drive. So this is not one that I've built. This is somebody else's that they built. It's just really effective. No. We want 10. Show cloud. Yes. Don't want to show extension. Okay. So I take no credit for this thing, just saying that. But you can see right in here, okay? This is people buying. This is people selling. People buying, selling, buying, selling, buying, so on and so forth. So seeing price at these inflection points, I can dictate, okay, if supply is depleted, now I'm looking for price to go up above that and continue to our next zone. 350 would be a realistic area to suspect. We're seeing a lot of oscillation around this. We're seeing a bunch of movement in this area. We're slowly pushing up right through here. And this chart has been going the whole time. You see, I still haven't broken 2 bricks of risk. And I said the 350 to 375 area looks like we're going to make it there. I'll make it even fancier. Let me go ahead and put an alert. If we get to 375, this will alert, and we're going to say that we were out of the trade at 375 clean. We'll just leave it right there. And if it breaks through here, so 2 printed bars, that should be right here, then I lost on the trade. So I am not in an active trade right now because I'm hopping around and doing all of the examples. But that is how you would set it up. You see those zones, you make your dictation, you still go into it with a strong thesis. If and only if I see a squeeze on the 5-minute chart fire, I will look to enter when 1 Renko brick is above my resistance level, or 2 Renko bricks are above my resistance level. Whatever your condition is, just make sure that you go back and you back test all of that info. So let me read through the questions here. 40 tick size. No, Again, for anything below $100, I use either a 5, 8, or 10 tick size. If the price is above $100, then I utilize a 25 tick. Are we in the third down brick for ES? Let me look real quick before I go down that rabbit hole. Are there any questions on tick size, moving averages applied to this, how to identify certain aspects of the chart? You can clearly see defined supply zones, resistance zones. You can see price oscillating in a specified area. What is ATR used for? ATR is a broad metric of what the expected range of a stock is. The ATR you see me utilize here is calculated from the open. It is not calculated from the close, and it is calculated based on a 14. There we go. We're out of the trade. It's calculated on 14 periods. So. A Renko Busby. Yes, you could absolutely do that. Okay, so let's get into the futures part of this. I see a lot of futures questions, so let's go ahead and that. That has been the stock portion of this. If you do not utilize futures, then please feel free to hop over or skip through the video, anything of that nature. But you may find a couple useful hints in the future section of this. So future bit different. Futures move in a 25 cent value per tick. 4 ticks make 1 point. When trading the full size ES, 1 point is worth $50. You remember how I said that you can lay in your own risk and reward values with this? Well, if I have 2 points per candle, that would be 8 ticks on the ES. That allows me enough confirmation of a move to feel comfortable about getting into the trade. If I'm looking for 5 bricks of value, that means I'm looking for 10 points. If I'm risking 2 bricks, that means I am risking 8 points. I'm sorry, 6 points. 6 points of value. Because you have the reversion of the previous brick. So that's 2 points. You have the one printed brick and the second printed brick. So 2, 4, 6. Now, if we're making our way up and I do my entry, 2, 4, 6, 8, 10. So I'm risking, depending on what I'm doing, how long I plan on being in the trade, I'm risking I'm risking 4 to 6 points to make 8, 10, 12, 15 points, depending on when the next range is through here. If I'm scalping in between, then I will risk 4 points to make 8 points. That's how I would do that one. So that would be, again, the equivalent of 2 printed bricks for 4 printed bricks. Now, the question was asked, if 9 EMA is above the 50, you only go long. Correct. If the 9 EMA, so our sun is above the ground, gets above here, then for my longer term trade of the day, I'm suspecting bullish momentum. If I log on, let me get rid of some of these colors, kind of make things a little bit easier for everyone. If I log on and I see that the 50 is way down here, my 9 is way over here, then I'll play half positions right through here, but I'm not going to have a full-on position, 4, 5, 6 contracts on one that is so far away from the 50. The same thing with shorting. If this 9 crosses and we get 3 bricks of confirmation of the move down and we are not at a support level, I will look to play that trade down to the next support level. So in here, we had price fail. We got our cross. So my entry would have been end of this brick, beginning of this brick. And I would have looked to close the trade let's see, let me look at some previous price action. This top, so actually, yeah, right at the reversion would have been the price. So we see how price danced in between here a lot. We can see how it chopped. So that would have been an area to get out at. So I would have looked back at the most recent chopping or area that looked to not be as concise, and that would have been my exit point. Now this could have just as easily went much lower, but the highest probability of reversion was in that zone. Let's go back to an earlier example. So if I was to go back here, okay, we had the 9 cross the 50, 1, 2, 3. Okay, so that would have been our area to get into. Where would I have looked to take profit? Well, we had price dancing right up in here. So 2805, not a bad area. So if we got in at 2802, got out at 2005. If I was going for my 3 bricks worth of profit, then it would have been in that same range. And we can see some people here, they did 4 brick and then it fell. So those are 2 areas I would have looked at to see, okay, this is where I need to exit. And I would have based that criteria together. Do you look to the top of a chopping area or at the bottom? Depends on what I'm looking to do. If I'm shorting something, if I'm shorting it, then I'll look at the top. If I'm getting in a long position, then I'll look at the center or the bottom. Typically the bottom, just to cover my butt if it's been a riskier kind of day. If we've had a day that there's been a lot of choppiness, a lot of sideways action, then I'll get out at the bottom. If I feel that there is a little bit more oomph in the move, then the center. So, and that's simply how you work with that. Now, let's use today for an example. We're on our 8 ticks. Let's see, all of today, 932, we made that initial movement up, and then we had all of this in between. Nothing in here designated a long or a short for me to take. We did not get our 3 bricks below any specific resistance area. I've got nothing. I got a 2 brick, I got a 2 brick, I got a 1 brick. I don't have 3 bricks. So right through here, all right, we're finally seeing some movement up. We rejected. So now I got to wait. Oh, look. All right, we finally had our movement up. Boom. This brick or this brick. Dun, 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 dun. 28.85. If you guys remember earlier this morning in the chat room, I got in at, what was it, 2? Heck, I'll bring it up real quick. Let's see. Let me bring up the book. So 28.70, 28.72. And I played right in here early this morning on the first run, 28.70, caught my move, got out 28.72 while we were all chatting. So I caught the meat of that move right through there. And then the rest of the day, we had this chop. Finally, as the stream ended, 28.80, And I said, all right, I'll be looking for the 28.85, 28.90. What do we do? Right up 28.85. People started taking profits, had a little bit push, and then boom, made its way down. How does any of this look on a regular candlestick? So we bring it on regular candle. This is what it looked like today from when I took that first move to now. So you see all of the wickiness in between, all the indecision of movement. So I can see a couple things in through here that people may have worked with, but overall, it seems we can agree that there is a lot of consolidation, a lot of should we go up, should we go down, no one really making a good decision one way or the other throughout. So that's that. Creed, at that 3 brick up that got rejected, would you have a buy order waiting at the beginning of the 4th brick that would be filled? The answer is sometimes. So let's get back to our Renko. Give it a second to Twitch. There we go. You can see it loading the data. Okay. So we had 3 bricks. 1, 2, 3. I would have already had an order sitting in at the top of that brick. So 28.82, 28.82.50, and then I would have had a selling order at 28.85 since that was a predetermined area. And we've had all of that choppiness today, like I mentioned, all of that choppiness in there. We want to be really careful about that. So if it's had a really choppy day, I bring that profit zone down. I bring it to a realistic level. There is a portion of this to where you just see price action getting tight. So we can see a air quote triple top right now. And you dictate to yourself, okay, if price test this moving average again, and then we print above, I will enter my trade and I will not exit my trade until we have 1 brick below the moving average. Do keep in mind, you could be in that trade for hours. It could go, it wouldn't go sideways because the brick will never print if price stays there until price either goes below or up. That's when we get our next brick. Doesn't matter if it's 1 hour, 4 hours, 10 days. If the market managed to keep it between 28.85 and 28.87, then we would stay with that brick. So you'd never get a new one. So it all comes down to the individual. There is no one shoe fits all when it comes to this. So, alrighty. I think that pretty much covers a lot of the how to put it on, how to look at it, how to work with it with specific averages and things of that nature. Real quick, I want to make sure I bring it up on AT charts as well. So for the people that use Infinity Futures, you're familiar with AT charts. I talked with Patrick, and they are putting more emphasis on their Renko trading as well. So you're going to see some more stuff in it. You can see right in here, I have the same moving averages. I have a 10 and I got a 50. The way you add Renko bars, you go to display. You're going to see it says Renko. Click on that. It'll bring up a Renko bar. The way you change the tick value is you hit the gear, and 2.0 is going to be 2 points. For the ES, 0.25 is 1 tick value for that. So 2.0 is what we want. And that gives us our 2 brick. I do recommend that you just measure it. So we can see here 2886 up to 2888. We confirm a 2 brick, or I mean a 2 point. We go back here 2884 to 2886. We confirm. So trust but verify. That's the biggest thing. And that's exactly how I use, work with, and run a Renko strategy. I put it beside my time-based strategy when I am looking to make certain movements and want more price confirmation. So, are there any questions? This is the Q&A time. I'm gonna give 20 minutes for Q&A, or at least until 1:20, so 15 minutes. Can't count today. Even if you don't have any questions, did you like the way that this was presented? Would you like to see more videos on different charting aspects? Sandra, sure. I'll provide it after the stream. I don't because this is going on YouTube. I don't want it to get copied throughout there. Yeah, you won't. It's a custom indicator. Let's see. Creed at that 3 brick up. Oh no, we already did. If this triple top were to fail, would you take a bearish position because the 9 is above the 50? The only way I would take a bearish position right now is if and only if we had, well, I wouldn't take it in there and I wouldn't take it in there. I wouldn't look to take a bearish trade right now. I know that's missing a lot of opportunity, but just because of the way that I like to trade, I wouldn't take it. If I did take it, I would do a half position with this is why I love AT charts. The AT guys over there, when you guys see this video, just know that I love the doodle feature. So price coming down, it would take 3 bricks, and we're at a previous support level in here. If we had 2 bricks below this area, so a brick there and a brick there, then I would look to take that trade down, but I wouldn't necessarily take that trade because of where the 9 is with the 50. So if I did, it would be it'd be a half position. More of this, awesome, because there are, I mean, just on Think or Swim alone. So if I go right over here to the time axis, you've got a bunch of different styles. Price action, we've got a bunch of different stuff to do with that. And then, where was it? On appearance, we've got area, equal volume, line charts. I mean, you want to have some real fun. Learn to trade a line chart. Again, it's all the same thing. So give it a second to quit freaking out. See if it'll bring it up. Okay, and then bring it on a time-based 5-minute. So 5-minute line chart. Yeah, try that. So, there, and I can show you how to do that. This is something that's used a lot more for Forex than for stock, but you can do it. At the end of the day, it is based off of price action. No matter how you prefer to look at any of this, remember that it is all based off of price action. Yes, Mad Phil, I will put it in the room drive, and it'll probably get put into the description of the video link as well. I want to wait until the video is uploaded to the YouTube so I can put all of it in the PDF. It'll probably be this Friday before it gets uploaded to the room drive. It just depends on whenever this video gets uploaded. All right, good stuff. Jay, what do you use Renko and how with ORB? So with open range breakouts with Renko. So let's say, what's something that had an ORB today? Let's use, I think Facebook had one. All right, so this is still Renko. Wow, hold on. Give it a second to quit twitching. Facebook needs to be on a 25 tick, and we're going to do it for 2 days. There we go. Give it a second. So we can see the true price of, remove that, our opening range with true price. See, 4 a.m. down to here. So our pre-market range was here, and we can see that with the true price. And then once we opened, our opening range was from here. Make that line nice and dark. So that big black dash line was the top. Our bottom was right in here. We started breaking out of it. So if you wanted to do a true open range breakout strategy, price failed, made its way above the pre-market, made its way up, and then back down. Now, once we broke that opening range, 208, we would have already had a predetermined price, be it 50 cents, be it $1. We would have had our risk already structured as either 2 bricks below, be it 5 bricks below, 4 bricks, whatever works. So if you're looking to make $3, then a risk of $1 is not that big of a deal. That would be 4 bricks through there. So if you're looking for price 208, 209, 210, 211, if you're looking up here, then risking a full dollar would not be that big of a deal with a 25-cent tick. So you just have to go ahead and set in your risk reward levels of what you're looking to work with. With this, I would do a 2 brick on Facebook. I would do a 2 brick risk for a 4 brick profit. So I do a 1-to-2 ratio, given what I'm seeing on the chart right now. And then today on ES, well, I mean, ES, we played right at the bell, and I played using TTM and Renko with ES. So one day, 8 tick. We opened at 9 o'clock. So we broke our resistance right through here. We had our candle print above it right there. And that would be a good entry there or there. I entered a little bit late, as you saw from the book, at 28.70, wasn't it 28.70.25, and wrote it up for 2 points. So I got in on the center of this right as the bell was hitting. But then again, I was running the stream. So, you know, if you're focused just solely on that, then the best entry would have been right in there. Not necessarily just below it. So you'd have to dictate how many bricks below it. 1 brick, 2 brick, 3 brick, 4. You know, just whatever works for you on that. Yeah, or across of the 9 EMA. That would actually be a really good. So let's say I will enter this trade at 28.70. I will look to exit this trade at either 28.80, so 10 points, or 5 bricks worth of value. So 1, 2, 3, 4, 5. My stop will be if we have 1 brick or 2 bricks below the 9 EMA. However you structure that thesis for your risk. The cool thing about it is, especially with ES, because of how it moves. So mechanically, is that when you get 2 bricks below it, you know you're 2 bricks below it. And the size of your brick will determine your risk. It will also determine your reward. You could set this to be, so let's see, 20 ticks would be, see, that'd be 8 points, right? No, 20 points would be 5 points. Sorry. So my risk would be, or my profit would be 20 points. So every brick you see printed is 20 points of value. So if you were doing strictly a 9 crosses 50 right through here, we made our move up, we pulled back to the moving average, we started to make our way up. So we can see in this range, it would not have been a smart idea to enter this trade until we broke out of that range. Realistically, 28.20. I think we can all agree that that's a good area. So an entry at 28.20, right in there, and then do. All right, I will not exit my trade until 1 brick below. Would have been this brick. Let's say you got in at the low level or got out at 28.38. You would have made 18 points. Now, what is 18 points? 18 times 50 gives us 900 bucks. That would have been over the course of the evening, the full evening, right through there. And you would have been out of the trade at 5 a.m. So 7 a.m. Eastern. Yep. And you'll have to play around with it for what works specifically for you. Whereas the 8 ticks works for me. Some people may like a 6 tick. Some people may want a 10 tick. So, just feel it out, work it on some different time frames. It is a little bit funky to get used to it, but once you do, it helps get out a lot of the noise, especially on a really choppy day. If we're on a range day, then you can clean cut see that range. So yes, so the NQ or the mini NQ, it will not matter. So the natural girth of an NQ candle is typically 30 points through there. I would add 25 on this. So a 25 tick. So bada boom, got out. We were already out of the trade though. So we see that price reversed. So a 25 tick on NQ is going to clean up a lot of the noise. I mean, I laid out all the levels. Whether or not someone took the trade per, the real levels I was laying out, that'd be it. Like I've always said, you'll never hear me say, "Hey guys, we should all buy this." But I do hope a couple people were able to see the logic in what I was describing, and I hope it worked out. So on NQ, you can see a lot of chop. Here's our upward range, a lot of chop, 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 chop. But if you did a 9 EMA and you said, okay, I'll get in at the 9 and I'll get out once the 9 crosses the 50, then you would have been in at 88.66. And the way that this is looking, it looks like it's going to cross probably at like 89.75. So whatever that value would be, about 100 points. You go, oh, 100 points. That sounds like a lot. It can be, especially on the NQ. To be quite frank, I forgot what the NQ tick value was. I think it was $5. Yeah. So 1 point. So it's $20 times 100 gives you $2,000. But that would have been over 5 a.m. all the way till now. let's just say you got frustrated and you wanted to get out now, then boom. So there are a plethora of different ways to play it. You just need to figure out what works for you. Again, it goes to the same kin as people who can play a 1, 2, and 3 minute chart, but suck at a 5, 10, and 15-minute chart, and people that are amazing of 5-minute charts, 10-minute charts, things like that, but they can't play 2, 3, and 1-minute charts. So. Keith, so that comes down to the person. If I'm scalping, then it's gonna be the initial bar and one more. If I'm going for that duration, then it's going to be that initial bar and then 2 printed bars. So once that second printed bar happens. So that would be the difference of 4 points of risk and 6 points of risk. Big dump on the SPY. Woo. All right. I love it. Let's see what it looks like. Bring it on our 8 tick. Did we see it? We all know that there was a bunch of choppiness through there. We saw choppiness. It's all right, Thinkorswim. There we go. So yeah, we had our range. You can see right in here, clear definition of the break. So 1 top, 2 top, 3 top fail. We broke through. 1, 2. So there we go. We actually got our 3rd bar. So this would have, had I been watching this, would have been a good trade. But I wasn't watching this. I was yammering. But you can see how clear that definition is. I mean, that's HD. That's 24K right through there. So good, clean definition of a trend. I mean, you really can't get any cleaner than that. Man, that's beautiful. Mel, so yeah, I'm the one that coined the term bread and butter list, and I haven't done a post on anything on it, but I've coined the term bread and butter list for darn near forever. The best thing, and the reason we don't have a generic bread and butter list is that it's darn near impossible to do. What my recommendation is on it, though, is find stocks between $2 and $15 and put 5 of them on that you like. So Snap, USO, X Steel, so on and so forth, and then find some mid caps, AMD, MU, Twitter, anything like that, and then put 5 of those, the mid styles, and then put 5 more of the more expensive stuff: Facebook, Apple, Baba, Tesla, and used to be BA, but that one kind of blew up. So whatever fits that criteria. That way you get a good exposure to cheap, medium, and expensive. So whenever I have one-on-one classes, that is how I distinguish the bread and butter. So, yep, yeah, and Keith, on that, the scalping versus the larger long time trade on that, it's going to come down to each individual. Where I'm okay with 2 boxes of risk, you may not be. And the fact is you may use a 10 tick and I use an 8 tick. So your 2 boxes would be 20 ticks, whereas my 2 boxes are 16 ticks. And that's an entire $50 in difference. So, it can add up. It just depends on what you're working with. So. All righty, peeps. I've been going for about an hour and a half now. Okay. Hold on. So, peeps, I hope this has been helpful. all the way through. If you have any questions, concerns, comments, suggestions, you can always send us an email at bbteam@bullishbears.com. Check out the link in the description below. You'll be able to see all kinds of great stuff. We got free courses, we got the membership, we got the chat rooms, we got all kinds of different stuff. This was a little bit more in depth, but this wasn't the complete in depth. If you want to see the more in-depth version of everything through this, make sure you come check out how I trade this during the day in the chat rooms. And you won't just see Renko, you'll see a whole bunch of other stuff. You'll see futures with Rose, you'll see some option spreads and stuff from Sig, and you're going to get a whole gambit of material. So a big smorgasbord. Anyway, make sure you check out the description below. This has been Creedmoor with the Bullish Bears, and as always, remember, your trades are in the history. I'll see you around.